So, everybody, welcome to Pre-Market Prep. My name is Tony Pollock. This is an RLT takeover here. This is the last day of the takeover, filling in for the boys over here for Pre-Market Prep to help them out this week. And today, we're going to be going over some awesome key levels on some stocks, looking at some market levels that are pretty interesting to us as well, reacting to some earning moves, giving you some tips to help you become a better trader, and setting up a live trade setup together, most likely together. It's going to be so much fun. Let's see what we can do. Let's roll that intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
What is up, everybody? Good morning. Good morning. Jeremy Newsom's in the house with me as always. My man, my homie. Oh, got it muted up, Jeremy, as always.
Kick this. Always muted.
It puts us on auto mute, man.
I don't know how to work anything. I love it.
What's up, man?
Gabe, hope you're doing awesome. Joel and Dennis are on a nice little vacation, and so they picked two Temu brothers to take over for them. We're the Alibaba Express pre-market prep. Tony Pollock and myself, we've been trading together for almost a decade. I've been trading for over 20 years. I've known Joel and Dennis for quite some time. And Tony and I are market enthusiasts. We love it. We enjoy it. We are very, very good at it. And we are here to bring you value beyond measure. So I'm excited.
That's it. That's it. That is the goal. Jeremy, it's been a decade, man. That is wild.
It is wild, dude.
Pretty cool. Pretty cool. Haven't really thought about that. That is awesome. Well, is this a hostile takeover? No. It's a friendly takeover. Don't go calling anybody. We're good. We were invited to be here. So we are so excited. Honestly, this past few days have been so much fun. Hanging out with our entire community over here at Real Life Trading, teaching some education, giving out from some free strategies. And today we're actually going to be looking at setting up a potential trade here, playing with some options. You guys are really digging some option stuff. Again, high probability, really, really easy trades that I feel like it's just a no-brainer. So we have some of those set up. We're going to be going over those a little bit later on. We've also got some special guests today that are going to be really fun, and it's just going to be a great day. So let's dive into these markets here, my friends. Let's take a look at what we've done over the night here with the futures. Strong move yesterday. I ended up taking that day trade that we talked about and ended up losing small on the first 10 minutes in the market. Got right back in and won big, just like we talked yesterday. So I will walk you through that trade actually, if you'd like. So, and then go through that a little bit here. So, let's see here. This is right at market open. So
this is on what time frame? 5 minute?
5 minute here on the SPY. Yep. So when the market, it's going to shift it all over for me here.
Now, Tony, why do you trade the SPY versus, let's say, futures or the SPX?
I love that because I'm trading options. So I'm day trading these options, 0 DTEs, and SPY is the king. I mean, the liquidity, the movement, the volatility on the options, it's just, you cannot beat it for SPY. So that's where I'm living because I'm day trading these options, and I'm day trading options because it gives me a massive edge. With options, you get the leverage, all the leverage to the good side, to your winning side, no leverage to the losing side. I can only lose what I spend. So I have a max loss, right? I don't need to even worry. If the markets drop 10% in 2 seconds, I only lose what I spent on the option. And so I can control my risk very easily. But when the markets align with me and they run, which they did yesterday, you're going to make well over 100% return of that investment. And so that's why I like to day trade options a ton. It is fun. So whenever we got this opening 15-minute hammer at the support that I was telling you all about yesterday. So if you go back and rewatch the start of yesterday's session, you'll see what I'm talking about. This support, I was like, I'm all over it. Got a hammer and then went into a 5-minute time frame and On this pullback, I bought some calls, and then it just kept on pulling back. So I was like, well, there's no bulls there. The good news is, again, I had a max loss. So I did an absolute zero style trade, which means I didn't have a stop. I have the amount on here that I'm okay to lose. When this thing hung out down here and I didn't get any strong buyers that I wanted, when it bounced back up, I ended up getting out for pretty close to break even. Very small loss. And then I was like, now let's sit back and see what this thing does. Okay, so I think I lost 0.3 Rs on the first one. And then it started to rampage. And I was like, I love that. Close back up above this, especially over on the 15-minute. It folded back down and gave me a hammer. Got back into some calls, and then I went golfing. I left the screen, and then my alert went off a little while later, and we ended up getting out at 688. So 688 was our target on all of this. I should pull over the let me see if I can find that here of what we were doing of getting in. Yeah, so this was me and my community yesterday. Bought the SPY calls. So this is, we do a $30,000 challenge in my community with the account size. So that was we do 1% on our day trades with that. So that's what he did. We did others in the other accounts, but then rampaged up and then sold on down and then closed them out here. So not too shabby. Filled at 80 cents, got out for $1.53. So massive returns on it. A little over 100% if my math is right, but that's all we did. So I was expecting bull moves, got shook out of this one, exited out of this, got back in when the markets told me, hey, I think this was all just a little trap. Held through all of this, ran up. Once it hit that 688 mark, we got out. So I did not get out at the top, but we caught a huge portion of it. I never get out of the top, but that was my play yesterday. And ended up working. So lost small, won big, and that was my day. And I did that all while I was the second part. I was all out at the golf course. My alert went off, and I just went on my phone. So I don't put an order in my broker, by the way. I put alerts because with options, especially day trading options, I'll look at it and go, okay, this thing's going to be at $1.20 by the time it gets to 688. Well, it was at like $1.55 or whatever. So $1.80. It was way up there. So whenever that alert goes off, I just go into my broker and I exit out on that one.
Had a good question come in, Tony. How do you choose your strike on something like that? And do you look at delta at all?
I do. So here's a kind of foolproof rule. 0.35 delta is always a pretty good way to go. I like to go a little bit out of the money, but not too far. So I want to give myself a little bit of leverage, but I don't want to go that far out, because if I go super far out of the money, if I would have bought on SPY over here, if I would have bought like the 689 strike calls, even though I was correct, they would have really struggled to make money because it took all day long to get there. So I bought the 687 strike calls just out of the money. So we bought it here, and I bought the one strike out of the money. I could have bought the 686 right at the money, bought the 687. So I go like one strike out is usually pretty foolproof. And that way, by the time it gets to my target, this strike is deep in the money. So if it takes a while, I'm not really getting beat up. It's not like living on hope. It actually has intrinsic value, and it holds its value a lot better, like shares. So you could buy in the money. And what that's going to do is it's going to just give you a little bit less leverage. So the further out of the money you go, the more leverage you get, meaning the more returns you get. You could stack 500% return, but the further out of the money you go, the faster it has to work, the more you have to be perfectly correct. Okay. So even if it works, but it takes all day long to get there, 6 or 7 hours, you're in trouble. If you go deep in the money, it's going to act a lot more like shares. And so it's going to hold its value better. It's still going to have theta. It's still going to lose over time with some value, but you're not going to get the leverage. You're going to get like a 40, 50% return unless it makes a massive move, instead of like 100 to 200% return on your money. So for me, I kind of meet in the middle. I go just barely out of the money. It gives me a little bit of leverage, and then it allows me to be able to still be deep in the money by the time it gets there, even if it took all day. So that's kind of how I've been day trading for years and years on these options, and it seems to work on pretty well.
Hey, so Tony, question as well, just to add to that, because I usually, like, if I'm day trading options, like on a Monday, Tuesday, Wednesday, I'll use that current week's expiration. And then if I'm doing Thursday, Friday, I typically then go to the following week's expiration just to avoid the theta effect. What do you do?
Yeah, you could definitely do that. There's so many ways to play options, and that's what makes it awesome. Yeah, 0.49 is great. 0.5, sure, it's fantastic. There's no right or wrong. And people are like, this is the only way to do it. It's like, no, you just have to understand the pros and cons. So the further out in time you go, the more they're going to act like shares. Exactly like you said, Stephen, the theta is going to be very minimal. And so for me, I set myself up. I'm trying to give myself the best return, and I set myself up with risk using my max loss rule here, where I buy the amount that I'm okay to lose, and then I'll add to it when it's working later on if I want. So I can actually buy the same day expiration, get the 0 DTE, because I don't care too much about theta. I know that if this thing goes to target, it's going to be in the money. Theta is going to hurt me, of course, but it's not going to be the end of the world. Delta is going to overcome that. But if it doesn't work, I have my risk covered because I have my max loss in play. And so if it just kind of, it's like I'm not out my whole count. I'm down 1% of my account, or I'm down 0.1% of my account, or whatever I put my risk on for the day, right? So I always do 0 DTEs because I don't mind the risk of theta. I'd rather take the quick move, because whenever you get these big moves, we were up 70% in like 30 minutes return. Super. I mean, it was super fast. And then it went up from there, just a little bit of a bump, and it was well over 100% return. Whereas if you buy this a couple days out, you're going to be up 20 or 30% return on the investment. So of your max loss. It's just, if you want it to be more like shares, but still be cheap, you want to go further out in time. If you want to get leverage and play that game, I would go as short as time as you can, and then balance in between out and in the money. So that's what I did yesterday. Again, there's no right or wrong. Like Stephen, like you're doing, you probably make like ridiculous amounts of money doing that. But for you, it's like, I don't have to spend $100,000 on shares on SPY or 60,000 on shares on SPY. I can buy some options for $500, and they're going to act like shares because, like you said, you're going a few days out or even next week. You're going to make money on it. They're going to be very consistent. They're not going to lose all their value in 2 minutes if the market's dropped like mine would have, right? If it tanks, the value is gone. That's why I really pay attention to my max loss. And so,
yeah,
no right or wrong way to do it.
Well, here's the good news, ladies and gentlemen. This is going to sound overly easy, and it is. The truth is, family, the only thing that you really need to determine is the direction. What is the trend? Most traders who lose money end up going against the trend. They don't believe the trend is the trend. That's how most traders lose money. And right now, fun fact, the trend is bullish on all time frames on most charts. Not most, well, any big market chart. All right, wheels up is dog crap, so the stock's going straight down. But most stocks are in bullish trends right now. That being the case, play bullish. And so if you are playing something bullish, there's a higher likelihood that you're going to make money.
Yeah, that knowledge right there. That's game changing.
I mean, so here's a question, Tony. How do you actually determine the trend for you person? Literally, I'm gonna have you pick up a random company. All right, so Tony's gonna pick a random company. I'm gonna pick TMC, the metals company.
TMC,
first random thing on my watch list. How would you determine the trend? What do you do? Start from right here. This is the 5-minute chart. What do you do to go, this is the direction of this company?
Yeah, first things first, what I'm looking at higher highs and higher lows to determine if it's a bull trend for me. So I don't care about like EMAs to tell me anything like that. For me personally, I'll take everything off the chart and I'm just looking at price action. I'm going to look and see, are we making higher highs or are we making lower lows and lower highs? If we're making lower lows and lower highs, we are in a bear trend. If we are making higher highs, higher lows, we are in a bull trend. And what I care about to tell me that the bull trend is no longer there is whenever we take out the higher low. When we are in a bear trend, the only thing I care about is if we take out the recent lower high. So here we fail to start making a new higher low. We take this out. We flip bearish. and it goes, and here's your lower highs, lower highs, lower highs, lower highs, lower highs. Once we take this lower high out, in my book, I'm going to flip bullish. This is going to change the trend for me, and this should start making higher highs and higher lows. So we bounced up. This, to me, is a higher low coming in, most likely. We are still bullish in my book. And so this is probably going to start moving bullish of what I would see until we start taking out this. So even if this thing were to drop all the way down to here, I'm still looking bullish until it can give me a new higher low or take out the previous higher low. So that's personally how I do it. And it works on every single time frame, and it works on every single ticker. It works on crypto. It works on SPY. It works on futures. It works across the board. So this is how I read trend. There's a lot more rules that go into it to determine like what actually is a lower high, like why I said these are not lower highs and this one was, but that's for another day. But that's the simple, like you can keep it as simple as that, and it works extremely, extremely well. And the cool thing is that you could be bullish on a 5-minute right now and then shift out to an hourly, and guess what? We are in a bear trend. We've already broke the higher lows, and it's probably doing something like that on an hourly. So the 5 minutes going to give me momentum and trend for probably the next couple hours, right? The hourly is going to give me trend and momentum for a couple days. And then the daily or higher is going to give me momentum for weeks to months. And so if we're bullish on a daily time frame, odds are we're going to be going bullish over the next few months. But if we're bearish on an hourly time frame, that could mean we have a couple bear days coming. It doesn't have to, right? If we were to close up above this, we'd no longer be in a bear trend, and it can shift. So that's how I am constantly looking at things. And people are like, well, what time frame should I use? I'm like, well, what are you expecting? How long do you want to be in the trade for? Do you think you'll hit your target in 10 minutes, or do you think you're going to hit your target in 2 days? Because if you're going to hit it in 10 minutes, don't worry about the 5 minute. The 5 minutes is going to go bullish and bearish 10 times over the next 2 days, right? I want to look more at like the hourly time frame. That's going to give me some clues here of going, okay, if I was in bearish on this one, I'd be putting my stop right up above that, because this would be changing trend for me and telling me that bulls are taking back over. If the bears are going to be here, we probably start to fall. And if we go out to a daily time frame on this, we're looking here. This is actually in a bullish trend here on a daily. So short term, we might be getting a little bit more selling, but then people are like, oh, why is it bouncing so much when it bounces to there? Because we've already gone bullish on a daily. So this is just probably that little part 2 of an S curve. So you have 1, 2, and then 3. So when the hourly goes bearish, it's probably just starting that part 2 of a daily. And then if you know that, you can go short to here, but I'm going to start getting out here because I know on a daily time frame, good chance we're probably going to start finding some more bulls. I piece it all together that way. So that's how I do it, and it's worked stupid well for me over a decade of trading. So that's me. There's other ways of doing it. People look at percentage drops. People look at EMAs. This price action method really hasn't failed me too much. So,
well, and Tony, what you just mentioned, I think a lot of people miss this, right? That there are macro trends, there's micro trends. So you can have a trend within a trend is basically what you're saying.
Exactly. And you can have a pretty decent bear move even when the bulls are still in control. And that's what I think screws people up, because they're like, oh my gosh, I'm going to go bearish. But all this was just this pullback in this bullish S curve. And so they go short right in time for it to move higher because they just didn't zoom out a little bit. So 100% zooming, yeah.
All right, sweet. Very cool. Alex says, can you do gold? We can, but I mean that we already know that trend. So if you're looking at gold and not saying, oh, that's bullish, then you're doing something. Sorry, actually, you're hanging upside down, or you've inverted the chart accidentally. You could be a vampire and live your life upside down.
Yeah.
Oh, you can do it. So it's a 1/. Here's a fun fact. If you guys have a hard time looking at markets, you can just invert the chart. And if you're a perma bear and you need to be reminded that you're almost always wrong, you can pop into a ticker, type a 1/, type in the chart, and it will literally invert the chart for you, because now this looks like absolute death spiral. And so all my perma bears get all excited, and then I remind them that this is an inverted chart, and then they go, "Oh no, oh gosh."
So yeah, even on all of this dip, I'd be looking to go long because we have not broken any higher lows.
That's right. You have to.
So looking even all the way through here, I'd be looking long until we start getting closures below that. It is still, in my opinion, bulls are in control. So it can do all kinds of crazy stuff. I'm still looking bullish because odds are we're going to keep moving. Now we're working on a new higher low now that we're working a little higher here. So this would be my new line in the sand that the bulls have to hold, and they'll hold it. I think this is going to keep partying for a while. So there's GLD. I know we're starting to get a lot of ticker requests here, and Lulu also reported earnings.
Yep.
So I need to put some stuff here on the chart so we can actually see it. I'll clear off the drawing so it's a little bit cleaner. So Lulu, a little bit of a gap up. Okay, so here you go. We're putting in lower highs, lower lows until there's your lower high. We closed above that a few days ago, and now we are gapping up. Like, we are shifting trend, in my opinion, on a daily chart on Lulu. So dip should get bought and push higher. Does it mean it's a guarantee? No, there's no guarantees in the markets, and everyone wants a guarantee. You've got to start thinking in probabilities. There's a higher probability that bulls are going to step in now and continue higher and make higher highs because bears have already proven they didn't do their job here. We've been going long for bears for a long time. This could be the start of something different. Now, here's the cool thing. We go out to a weekly time frame. We also put in the weekly structure. So we're flipping bullish on a weekly. We go out to a monthly. All this is probably a reprieve rally and then something like that again. We'll see if it changes. But on a monthly, we are still putting in lower highs and lower lows. So I would expect a monthly to probably do something like this over the next year or two. So short term, we just flip bullish on a daily and a weekly, and it's at the 200, bounce back up, and then I would be looking to take profits here. This is not one that I'd be like, let's hold for all-time highs again, because the bullish structure is broken. It doesn't mean it can't do it. It's just probabilities telling me bullish to here, drop back down. Just like this. If we go back to this bouncing level right here, back in September, we broke bear trends here and went bullish. But all this was doing was just giving us this little reprieve rally on the monthly before it folded back over. We're in that same situation again. So there's money being made bullish there. Understand where to take your profits, and you'll do a much better job at locking in profits before it reverses and you give it all up.
Yeah, nice. I bet you can't do this on Ethereum. I bet it's impossible. Bet you can't chart Ethereum.
Oh, man. Well, you're right, Jeremy. There's no way this works on crypto. There's no way this works on crypto. On a monthly time frame, since we're already here, we just made a new higher high. So I would bet you a higher low is coming. In fact, we might be putting it in right now. How do we know it's coming in? Go to a smaller time frame and see if momentum's starting to shift. On a weekly, we're not quite there yet. So we'll see what happens on that. On a daily, oh my gosh, we just broke trend on a daily. Pretty good chance we might be seeing some continuation on momentum here on Ethereum. So this is how I'm trading, and I'm going across every different time frame to try to figure out from large to small of where we're at. And then if we go to a 5 minute, it's just a snip. I'm just kidding. So we go to a 5 minute. Now we can start to see we were putting in lower highs, lower lows. This needs to hold. We just broke that. And now bulls short term right now over the next hour, maybe 30 minutes, I would expect some more higher highs and higher lows to come in until we can work our way back to probably that target, and we'll see where it goes from there. So that's what I got on Ethereum. Short term today, probably going to be pretty bullish based on this trend.
Now, how do you trade Ethereum? Like specifically, Tony, what do you do?
I invest it. I don't do a whole lot of trading on crypto because I spend all my time selling options on other stuff, but I could if I just want to make the time to sit in front of the computer, but I usually
invest in it. So like you just buy it through Coinbase with extra cash and just hold on to it for the long haul.
Yep. I hold on to it until it hits certain all-time high levels that I want to be at. So for me, Jeremy, this was back like in the Miami retreat days when we were like buy Ethereum.
Yeah.
loaded up on Ethereum. And by the time my brother's like, I just bought Ethereum. Is this a good? I was like, I'm out. And so it was pretty, dude, that brother-in-law or friend, or even your grandma is like the top of the market. When your grandma's like, I just bought me some Ethereum. It's like, oh crap, sell everything. So that's a good indicator. We need to make that somehow to show up on a chart. When everyone's brother-in-law start calling him on the phone and said, I just bought this. But that was the start of my Ethereum investing. So I do have long-term holds, but I'll also kind of I'll play a lot more of that swing, so to say.
Yeah, totally. Love it.
Yep.
Awesome. Let's go. Type in a 1 if you want to go do a live trade together. Who wants to do that? Is anyone in for a setup that we will do together all in unison as a big party? Beautiful. All right.
Jeremy, yeah, share your screen, man. You take over on this one. I'll let you have some fun. I've been yapping enough.
All right. Well, I'm 100% sure I'll press the wrong button and I'll kick myself out and then I'll mute my microphone. But yeah, let's make that happen. Give me 4 whole seconds. All right. Share screen. And we're going to have a guest come on in about 6 minutes. The good news is this is pretty quick to happen. So allow to share screen. There we go. All right. So the trade that we're going to do a setup on together, boys and girls, is TSLL. So what I really like about TSLL is this is a 2x ETF of Tesla. And I know there's a lot of Tesla bulls in the building, which is beautiful. And as of right now, you have a pretty good compression that's happening. So I'm going to analyze everything from Tesla and then pop over into TSLL and kind of make my decision from there. So as I mentioned kind of yesterday, I am selling puts around the 420 and 410 areas on Tesla because I do believe that if I can own some shares down there, that would be fortuitous for me. Now, I also think that there's a really good chance as we approach Christmas holidays, which, by the way, family, is essentially next week. After next week, you're going to start seeing volume taper. Now, that doesn't mean that direction has to taper. I actually do think that we slowly continue to melt higher because Santa Claus is real and we're going to get the Santa rally. But can we get a big black swan event? Of course. And then that would rally out of that. And then, of course, likely volume starts tapering and then we just slowly kind of get pressed higher. I believe that that's higher likelihood across the overall markets. So on Tesla specifically, this is how I trade as I use these long-term averages. And what you'll notice is right here, we trade down to the 100 simple moving average and had a beautiful, beautiful bounce around 388 or 400, which is where I was a buyer. And so I would love to get that opportunity again. So that would be about $400. Although the premium on Tesla at 400 isn't screaming, what is still screaming is TSLL. So TSLL, you can sell a $16 put, which corresponds to approximately 400 for Tesla, just a little bit higher. But if you're selling a $16 put and you're doing that for December 26th, you actually are receiving over 1% return. What I actually look for on my put sales is somewhere between 1 to 2% of the strike price premium. This is what I personally do. So when I say I sell puts, this means that these are naked puts. Keep in mind, ladies and gentlemen, that naked puts and cash secured puts have the exact same risk profile as owning shares. The main difference is with naked puts is you can over leverage yourself. And I do not do that 94% of the time. When I sell a put, I am simply saying, do I actually want to take ownership of this particular position down here? And the answer is yes. I would like to own TSLL at 16 because if I believe if I own it at 16, there is a 100% chance I'll be able to sell it above 18 before the end of February, which is a 21% return. So for me, if I get a share of TSLL put to me at 16 or lower, I'm quite happy. We can sell some puts over Christmas, right? Market's going to be closed and we're going to have a slow day on the 26th. Or if you're feeling a little bit braver, you can sell a January 2nd 1550 put sale. So the 1550 is just a little bit lower, which is right here, and you're going to get almost 2% for that. And again, when I say 2%, I mean of the strike price. So $15, 1% of $15 is 15 cents. What you have to think about is how much that will slowly build into your account over a period of time. So that's just a strategy that I'm going to be personally doing, and that is a sell to open put, because I do want to own shares of TSLL. I'll be doing 16 strike, and that will be the expiration of both December 26th, which is not that far away, and January 2nd. There's a very large chance, as in like 87% chance, that when I sell these puts, I will be able to buy to close both of them for a profit on the 30th of December, locking in my final year-to-date gains. So that, ladies and gentlemen, is what I plan on doing on TSLL.
That's a golden nugget, a Newsom nugget right there. Fantastic. What a great trade. And we're talking about these high probability trades, my friends. Like that.
It's a very high probability trade. Yeah, that's well over 90% likelihood that it wins without even getting put to shares. If you do get put to shares, then you have another 90+% that you're going to win on those.
Yeah.
I want to congratulate Jeremy on not actually leaving the room when he stopped.
Yeah, I did it. Well, actually, because Tony took it over for me, I didn't press these more buttons. That's actually why it happened. Either Tony or you, Steven, one of you actually helped me out on that one. So,
oh man,
I love it.
Good stuff. You're crushing it. We're learning here. On our last day, we're like, we're starting to get this now.
That's right.
Y'all are the best. I'm sure Josh is going to be stepping in here any second with some fun news, and then there we go. Right on cue, man.
Right on cue.
We're just
sure are. Yeah, I was just waiting for the cue. Hello, everybody. I've been in the background a little bit here. We'll actually have a special guest today for our Crypto Corner segment. It's not quite time, and you know what? Actually, the news is just some Fed speak, so it's not really
Surprise.
Big news this morning. Yeah, it's it's a little boring. I mean, we've got some Goolsby comments. Yeah, that no rate cuts came like they weren't soon enough. Anyway, not really any big macro news to share today, but I will share just a little bit about our sponsor, Hive. And I'll tell you that the next segment, Crypto Corner, is brought to you by Hive Digital Technologies. And Hive, if you haven't checked it out, it's a global leader in Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. And it's on track to capture 3% of the world's Bitcoin production by the end of 2025. And I should put up the banner here. Getting used to this, doing Brent's job here as well. I mean, not only next week we'll have Joel and Dennis back, but then later next week we'll have Brent back as well. So again, big thanks to you guys for stepping in here, the Real Life Trading team. You guys have been awesome. But before we have on our guest as well, do you want to go a little bit deeper on Bitcoin, on Ethereum? Like, are we expecting there to be more bullish action? Should we be bearish?
You know, I'll say this, just my personal opinion on Bitcoin. I'll do another chart, and I really hope I get it again. Present. Am I still sharing my screen?
You sure are. Yeah.
Oh, sick. Perfect. Okay, awesome. So here's Bitcoin, BTC USD, and this is the level talking about just, you know, trends and moving average on things. This is a bunch of random drawings on the screen. Don't matter about those. So what I'm going to do is I'm going to pull up the weekly 100 simple moving average, and I can assure you, ladies and gentlemen, I have been trading Bitcoin for a very long time, and I will say this price absolutely needs to hold. Will it hold? I think so. Because to Tony's point, this is a higher low relative to what we did in March of 2025, which is this year, by the way. So March, April of 2025, the whole tariff spook, the whole issue, This is a higher low. And did we make higher highs relative to Tony's point? We did. So Bitcoin is still making higher lows and higher highs. So just keep that in mind. If, however, at some point in the near weeks, 2, 3, 4 weeks, if Bitcoin closes below the 100 simple, which is about 84,000, I do not have a good outlook for Bitcoin. It will get a little ugly and it will get a little terrifying. I don't believe that's going to happen. I'm actually a relatively strong bull on Bitcoin. I think this was a beautiful pullback. In fact, I know it was, right? So from the highs to the 100 was a 34% discount, which is what every one of us wanted when we were buying something for Black Friday. We got it for Bitcoin. It's here. So as long as it holds 84,000, we should be just fine.
Awesome. Thanks, Jeremy, for giving us your take there. Now I will bring on our guest.
Hey, good morning,
Louis
guys.
Sykes. Not only are you a senior crypto analyst at All Star Charts, but as I understand it, you're also the host of a show called Crypto After Dark. Good morning.
We just went live yesterday, actually, for our first show. I think there's a tremendous amount of opportunity in crypto if you know what you're doing. And so that's why we launched the show, just outlining just the key themes, just what I'm watching, and there's a lot of exciting developments happening in this asset class every single week. And even though the price has been a little bit lackluster, as you guys are talking about, the amount of developments that is just happening underneath the surface and heading into 2026 is really exciting. So I think we should just talk about that today.
Yeah, I think so. And I know it's about 2:30 in the morning for you here, so we'll bring it back. We'll make it like the high school days and get you in and out real quick here. So why don't we start with the Bitcoin issue or non-issue? Are you leaning more bullish or bearish into the end of the year here? Give us your take here.
Yeah, absolutely. Well, a few weeks ago, well, actually probably closer to 2 months ago, I came on the show and at this time, Bitcoin was breaking below my key level of support. I like to keep things really simple because even though crypto, you can really get into the weeds with this stuff, just keeping it really simple, just identifying key levels. When Bitcoin was losing that 100,000 level, that was my line. It was time to get out. The trend was shifting. And now we've seen just crypto in general just bleed lower. So where to from here? Well, crypto is just turning more and more into a macro asset. The way that I like to view Bitcoin, I just view Bitcoin as just another Magnificent Seven stock, right? It's correlated to all of these mega cap technology stocks. And so when you see risk appetite beginning to grow, when you see small caps, the Russell 2000 index making all-time highs, then that to me is a sign of investor appetite. Investors want that appetite for risk. And I think ultimately that's going to flow down to Bitcoin. I think that Bitcoin and crypto, more specifically, the tide is going to shift. I think the setup looks really nice heading into the end of the year. And I think Santa Claus is definitely going to coming for Bitcoin. So I think expect some major bullish engulfing candles in these next few weeks.
Okay, well, that was actually one of my questions, was if there was seasonality heading into the end of the year here with a little Santa Claus rally. But one thing I'd like to ask, so we had the Fed meeting and the rate cut, and usually when we get the cut and we saw a bit of a rally in other assets, but yeah, Bitcoin has at least been hanging out here. So I was just wondering what your take was, given the rate cut and we're not seeing Bitcoin rally too much, or am I just being myopic here and you are still bullish because of the rate cut?
Yeah, well, I mean, I'm not necessarily bullish because of the rate cut. I think a lot of that is just noise. I like to keep my process very, very simple. And we can talk about the Fed. We could talk about what's happening in the White House. I don't really care. I follow market trends, and I just see that there's investor appetite for risk. Right now, we're seeing small caps making new all-time highs, and I think it's ultimately a matter of time before Bitcoin catches higher with that. And so, we're still recovering from the entire crypto asset class has got a big hangover on since October the 10th. October the 10th was a really key day because that was the day that the crypto market saw its largest crash on record. And as you pull it up here on your chart, it doesn't look that meaningful. You're like, okay, well, Bitcoin just had just a pretty standard down day, Louis. Like, why is this such an important day? Well, because when you look outside of Bitcoin and you look at the smaller cryptocurrencies, these things literally collapsed 80 to 90% in a single day on October the 10th. That is a major market crash. And so generally speaking, what tends to happen after these big liquidation events, a whole bunch of people get liquidated, margin called, is that some large players often get taken out, and then it takes a while for the market to just readjust for this whole bottoming process to occur. That's what we're seeing right now. It's almost this malaise after October the 10th. But I think ultimately, you can almost feel it like a rubber band, right? You've got stocks making all-time highs. You've got some of the most speculative stocks, small caps, making all-time highs. And at the same time, Bitcoin is hanging out near the lows. And Bitcoin is literally one of the most extreme expressions of risk appetite. So it's almost like this rubber band, right? And that rubber band can't dislocate for too long. We see dislocations in correlated assets all the time, but the more the longer that dislocation, the more that rubber band gets stretched, and then when it gets released, man, that thing just goes absolutely slingshotting in the other direction. So I think we're going to see that exact same scenario playing out in Bitcoin.
Okay. Well, like what are some of the smaller names here? I was just looking at like an XRP and Solana, although they're still a little more popular. But are there any particular names that you're looking at to for that slingshot effect?
Yeah, I could quickly share my screen. I've just got a few slides here. Not
Yeah,
necessarily of
let's do that.
charts, but more so themes to help me find some key winners. All right. This is what I'm talking about. This was the level in Bitcoin. We broke below it, and there's been no reason to own Bitcoin below that level. That's been clear, but now we're starting to see this dislocation. Small caps making all-time highs. We're seeing that investor appetite for risk. And so I think, this rubber band is really stretching in the other direction. And so you ask me, okay, Louis, if this is the case, then what do we want to be buying? Like, what's the play here? What's the trade? Because Bitcoin is becoming a little bit boring. In all honesty, it's a multi-trillion-dollar market. It's almost like the crypto market's version of gold. It's just a store of value, right? And so it might double in a great year, but that's when we talk about crypto, we think about the 10x's, the 1000x moves that we see in the asset class over time. And the space that I think that we're going to see that play out a lot heading into these next 2 years is the entire tokenization space. I'm not sure how familiar your viewers are with what's happening with tokenization, but there was an article in The Economist literally just a few days ago, and they were talking to Larry Fink, who's obviously the CEO, the co-founder of BlackRock, the largest asset manager in the world that manages $13.5 trillion. And obviously he's becoming more deeply entrenched in the crypto space, obviously because the BlackRock Bitcoin ETF has just been literally their most successful product of all time. It's making them an exorbitant amount of money on fees. But he said that tokenization is going to be a more impactful industry on the global economy than artificial intelligence. And so coming from the largest asset manager in the world, that's quite something. And so what actually is tokenization? Tokenization is basically bringing real world assets, stuff like gold, commodities, money markets, stocks, ETFs, onto crypto technology. And now, why would you want to do that? Because I live in New Zealand, right? I live in the absolute bottom of the world. But if I was to send you, for instance, I assume you're based in the States?
In Canada, actually. But
in Canada.
I'm pretty close to the States, yeah.
So if I were to send you just $10 and to Canada, it would take days to clear. It would be expensive. We would have to work with all these different Swift codes, and it would just be an absolute pain in the ass, right? I could send you that same $10 on a crypto network and it would settle basically instantly, basically for free. And so what financial institutions and what Wall Street is doing right now is they're just watching crypto from the wings. They're watching all these degens just battle testing it out, losing all these money, all this money just being absolutely reckless. But then they're saying, hey, you know what? In this battlefield that's in front of us that we're watching right now, we can actually pick some of the technology that is enabling some of this battlefield right now, and we can use it to upgrade our own systems. And so, there's a few crypto networks now that are literally moving trillions of dollars in overnight repos for large financial institutions, and they're raising hundreds of millions of dollars from the likes of Goldman Sachs, Virtual Financial, S&P Global, the NASDAQ. And so I think the tokenization industry is going to be a major one to be watching. And even Coinbase has literally got their pulse on the crypto market more than anybody in the world. And they literally just like say, hey, dummies, like it's literally real world assets, tokenization. You need to be watching that heading into 2026 when the largest, most established crypto exchange in the world, the most compliant crypto exchange in the world, their venture wing is saying, hey, real world assets, tokenization, you need to be paying attention to that.
Okay. Just to ask the question, like a lot of people are into crypto and into things like Bitcoin because it's decentralized. Like, would tokenizing a lot of these things, would that still be decentralized as it were at the core of it, or is there something to be concerned about there?
Let me tell you something. These libertarian bros who got into Bitcoin early because it was this big middle finger to the banks and financial institutions, they were right if they invested in Bitcoin, but they were right for the wrong reasons. And so the market is just maturing. So this whole, we need to get away from banks and financial institutions. It's actually the opposite. We need to embrace it. We need to embrace the financial and the financial regulation, compliance. And it's really funny you mentioned that, because you have a look at a really good example. You have a look at the two largest stable coins in the market. You've got Tether and you've got Circle. So Circle is a publicly traded company in the United States that issues the second largest stablecoin in the entire crypto market. And you have a look at those two. Tether is offshore. It's audited by, it's held in the Cayman Islands. But then you have a look at Circle, which is as close to the US regulatory perimeter that you can get, right? And the only people who are acting like real adults in crypto are those who are inside the US regulatory perimeter. Stuff like Galaxy, stuff like Coinbase, Circle. But then the companies outside the US regulatory perimeter, stuff like Binance. Binance was solely responsible for the entire October the 10th crash because they had a software glitch on their platform. And then Tether, for instance, operates in the Cayman Islands, and they're buying Bitcoin for something that's supposed to be stable. And so the only ones who are acting like adults in the room are those who are actually being compliant and regulated by large US financial institutions. So that's why the market, if we start seeing this tokenization, we start seeing Wall Street coming in and using these crypto technologies to benefit their bottom line and to offer better services to their clients, that is unequivocally a better thing. And even though you might see a little bit of a dip in that decentralization, it doesn't really matter because it's going to make the world so much of a better place.
Gotcha. All right. So we want to play by the rules. I like it.
Absolutely.
All right. Well, Louis, it's I know it's late for you, so thank you again for coming on, giving us your take on the crypto markets and giving us that little hint of what's maybe to come with tokenization. So thanks very much, and we'll have you on again real soon.
Absolutely. Thanks, Josh. Have a good weekend.
Yeah, you too. All right, Tony.
What's
up? Hey, just bringing you guys back on from the background. We got about 10 minutes left here.
Yeah. we can take a look at some of these markets. We haven't had a chance to really do a market overview too much because I got sidetracked on a day trade that I took. So at the moment, we're getting a little bit of a gap down here on the futures, but it's getting bought up nicely. As you can see, there's a super strong support stepping through here on the futures. I use the SPX 500 just to match up where I'm trading with SPY and the S&P 500. So it's looking really, really good. And if I go out and take a look at the options here, so 690 is still just stacked. I believe that's going to magnetize to 690. We should be hitting 690 today. We just about got there during market hours yesterday. It got past 690 post market and kind of pulled back down. I think we're going to come back around and hit that one more time. So if we were to pull up SPY here on extended hours on and get all of this cleaned up here, get it. I would love for TradingView to just keep my scale the same, so I don't have to have like this chart every time I pull up a chart. I actually have it like where I can see.
That'd be too nice. That'd be too nice.
You know, if someone executives out there listening, that'd be a great feature. But I think we're probably on our way back to retest this 690 to 691. We're gonna see where it goes from here. So we'll see if we poke our head up there and then get whooped to close the week out. Or if this can hold. I would expect selling at 690 to 691 today. It's just how strong do these bulls step in? If we can close strong, it is going to set the tone for next week. And then that $700 target that everyone's wanting, it's just hanging out there. We might be able to get that pushing in through the end of December or early January. So this close today is I'm going to be watching very, very closely to see how the weekly candle closes. I don't really want to see a big upper wick on this week's candle. It's not the end of the world. It's such an easier tone setter to have a strong close to be able to play for dips next week if we end up getting any, or to be able to set some targets up here for next week. So that's kind of what I got. What do you see on anything out here, Jeremy or Steven?
Yeah, my homie, I'm with you. I think that we just kind of slowly rest. I think this is a digestible gap down, meaning it's not going to be overly crazy. I think we just slowly kind of grind higher and make new all-time highs. I think you said it yesterday that we should hit new all-time highs by the end of the week is what I heard you say. So that's like points away on the SPY. And there's a very, very good chance that we get there. So just in general, to me, I mean, I'm looking at this, and as I look at it, this trend is bullish. So I gotta be looking along. What's your take on Broadcom, AVGO? So they had earnings. We looked at Lulu. Great job. What should people do on Broadcom?
Yeah. So this is a perfect example right here where I'm using this higher low as my line in the sand. So we're having a gap down, but we're holding. And so this, as long as bulls can step in, we're about to hit the 20 EMA here, and the 20 SMA is this dotted line just underneath it. I would expect some support to come back through. And if this can kind of just chop, then you've got your little cup and handle, and maybe the party continues. A gap below 370, I'd be like, this is going to find some selling. We're not getting that. We could, but I doubt that's going to be coming in by open. So as long as we chop here a little bit, this is going to shake out some people that got pretty excited, like you were talking about here. Big volume up here on these highs, right?
Weird.
Like a lot of selling volume and a lot of people buying. So we're getting a lot of people bought up there that are going to be stuck. They're probably going to start to sell, but as long as it can hold these levels, it should be fine. On a weekly time frame, a pullback on a weekly is completely normal. We are still putting in higher lows, higher highs, right? And that's why it's so important to get a bigger picture, because even if this were to break, we're still just fine, and it's probably just going to sink a little bit, get all the bears in, and then squeeze them out. So at the moment, I'm leaning bullish until otherwise proven. This dip should be pretty viable. We'll see if the bulls actually step in and open.
Yeah, I love it. All right, sweet. People want a review and a repeat of Oracle, ORCL.
Yeah, bulls stepped in, kind of where they had to.
they better hold this level, or it's the easiest short of all time.
Yes. Yep. This is setting things up now where if we take this low out,
173 for sure.
Yes, 100%. Play back into some more supports. Let's fill some gaps. It'll be a very easy play. And like, this is what I wait for. I'll talk to you yesterday about great trades. Great trades are where the easiest trades happen. It's the one you just get in and it goes to target in 10 minutes.
Yep. That's what this one is.
That's what this one is. So
Yep.
put an alert there. If it gets there, it's going to be fun. And
Yep.
the sooner it gets there, the better.
Yep. If it takes out the low of today, it's going to go lower. Woo! I've been seeing this request in forever. Terry's looking at ALB. Oh, man. I haven't pulled out this chart in a while. ALB, Terry. Here we go for you, my man.
Jeremy, you want to run on this one? I'll let you put the 2 cents and I'll follow up.
Yeah. So just looking at the chart, let me do a screen share. I will get a lot faster at this, I promise. Okay, share screen. Beautiful. ALB. So it has been in a big downtrend for a while. I also generally use higher highs and higher lows for downtrends, but I also like to use long-term moving averages because they just kind of help me see what's going on. So stock's been around for a very long time. This is a dividend-paying company. And what you'll notice is we've just gotten demoralized realistically since August of 2024. But really since May of this year, we have been rallying very nicely. This is a stock that Dan Jansen, who is in the day trading room with us, loves a lot. They consistently pay dividends and they have really recovered nicely, which is fantastic. We are at the 100 simple on the monthly at this exact moment in time. ALB in the last few months since May, my birthday, has been up 138%. And then here's the weekly chart. Weekly chart looks pretty good. And then the daily chart also looks pretty good. Dividends is coming up. And after 3 buying candles in a row with dividends right around the corner, I would simply expect a little bit of selling, and then I would buy that selling. Just because the 100 on the monthly is here, and this does need to really reestablish itself. One of those legacy companies like 3M or GE that's probably really never going away for a long time can move higher. Just it's a touch up there, moving up 138% at the 100 SMA on the monthly chart as a resistance. So I wouldn't be buying a whole butt ton here. But if it has a little bit of some dips, I could start to play it. And if I was in a lot of shares at this exact spot, this would probably be a great time to get into a collar.
Yeah, 100% agree on that one because, again, it's all about understanding where profits should be had, and price action is going to let you know that. Like Jeremy's just like you notice he wasn't like I'm buying everything. It was more like it'd be time to start exiting some stuff. This is the zone for profits.
Yeah.
And then it's time to start planning ahead, right? Price action is going to show you what's about to happen.
Yep.
So,
I will type it in 2 really quick before we leave. If I can give you my number 1 stock that I'm buying right now, the one that I'm really actively excited about. That answer is Robinhood, believe it or not. Our Robinhood had a massive pullback yesterday, almost 10%, and it traded down into the 100 simple moving average on the daily chart, which is one of my number 1 signals. I'm not saying the stock cannot go lower. In fact, it probably can. I think 117, 118 is very realistic, but I just want everyone to know between now and beginning of February, I will collect as many shares of Robinhood as I can, because it had a very interesting systematic earnings sell-off. They did incredible on earnings. They had a big dip. The pattern looks almost identical to March and April of 2025. You got some good pullbacks recently, and this one will go higher. The stock is an incredible company with amazing assets, with an incredible team, and they had a 10% down day into the 100 on a guaranteed uptrend. I'm bullish on Robinhood.
oh, man, ending it out with a banger. That's awesome. For me, it's like if we crank 140, what other confirmation do you need? I mean, put an alert out there.
Yes, sir.
Yeah, this has been such a fun 3 days. Thanks for putting up with us, hanging out with us, having fun with us. We like to be a little bit more lighthearted and just pour as much value as we can. That's all we want to do. What? Jerry even throwing out some awesome balloons? Man, technology everywhere. Guys, if you want to come check us out over at Real Life Trading, this is what we do every single day. Live day trading rooms. Come trade credit spreads with me every single week. 30 days for free. Go check that out. We've already sent the links. Just look up reallifetrading.com and all the education and courses you could ever want. So literally thousands of hours also over on our YouTube page. We have been best friends here with Pre-Market Prep and Stock Trader Network for years and years and years, because you're here for a reason, right? This is where you're actually going to learn and get the real value, and not just some fluff out here that's not giving you anything. So thanks again for hanging out with us. It's been awesome. We still have the rest of the day that we're going to be going through today and having even more education and more strategy. So jump into that Stock Trader Network and have some fun with that. But appreciate you guys having us. It's been awesome.
Yes, yeah, big thanks to you, Tony and Jeremy, and Steven for taking over the last few days. It's been awesome. Yeah, everybody watching, make sure you go check out reallifetrading.com. These guys are great. Of course, we're gonna have you guys on. Yeah, or we'll have you back. As well. I mean, I know people have been calling out in the chat. We'll get some Triple D rants next week. Don't worry. We'll be back with that. And last manner of business here, just before we end the show, wanted to shout out TradeStation, because you know what TradeStation can do is they actually have their time frames for their charts. They stick the same every time, and you don't have to adjust them every time like TradingView. So there you go.
That's sweet.
Yeah, no. Just for TradeStation, not only do they have charts, but they're also an all-in-one platform, as in their broker as well. Their order execution is on the order of about 1/10 of a second, and they work hard to get some price improvement for their customers as well. So, any last thoughts here before we say bye to you, Tony, for the weekend?
No, you all have a great holiday. Remember, find those great trades. The money will come, and just stay patient. The market's going to reward someone that's patient. Again, the more desperate you are, the more you're probably going to lose. If you can just keep the right head on your shoulders, keep learning, keep growing, never stop learning, and the markets will give you a life better than you can ever imagine. Realize that something great's always around the corner, right? The trade that you need to succeed in trading is a couple weeks out. It's not going to happen today. When you lose money, you want it today. You want to make it back today. Realistically, it's probably in a couple weeks. So keep your head up, keep going on this journey. It's a hard journey of trading, but it is so worth it, and it'll turn you into your very best self, make you happier across the board in your life, but also change your life financially. So appreciate you all for being here. And again, send me an email if you guys ever need anything, reach out. But grateful you guys are having me, and enjoy the holidays.
Yes, exactly. Enjoy the holidays. All right. Thanks again, Tony. We're going to head over to the Stock Trader Network today. Mitch is going to be there. Dan from Real Life Trading is going to be there. Chris Bretcher is going to be there. And Johnny is going to finish out the day. So it'll be an awesome Friday. We're also having CC Legator on there too. All right. Thanks for tuning in, everybody.